Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, November 30th, 2010. Well, the market's again getting pushed lower on continued unrest in Europe, folks. Bottom line is this: Greece first, now Ireland, soon Spain, Portugal, Belgium, Italy. The list goes on, and the markets continue to be very, very shaky in regards to how much or how many bailouts it's going to take to get Europe back on the decent track. And we're not talking about growing strong here. We're just talking about not failing, not blowing up. That's what we're really talking about here. Right now, the markets are lower, but again, well off the lows of the day. The Dow is only down 11 points on the day, NASDAQ down 20, and the S&P down about 2.5. Now, the most amazing thing, again, we're seeing a repeat of yesterday. Yesterday, we saw the markets sharply lower early in the day, just like today. But POMO, Federal Reserve propping, continues to be the name of the game. They are propping this market up day in, day out, using the dollar, using POMO. POMO, remember, is permanent open market operations. It's basically QE2 divided into smaller sections. So again, QE2 was 600 billion. POMO is daily injections of that 600 billion into the market, or basically to the institutional banks, in which case they're taking the money from selling treasuries to the Fed and then putting it to work in the markets. And again, you can see it very clearly. Today the market gaps down, moves up, pauses, another surge to the upside. The trend lines are working amazingly well. The trading today on the intraday basis has been second to none, just like the last few days and the last few weeks. The volatility in this market is fantastic right now. This morning, there were trades on the spiders, on Apple, on Google, on many other plays, including some other swing trades that we've been talking about for a couple days. They continue to pay profits off in droves. Now, again, notice here, today's the gap down. All right, so let's just talk about levels. We're going to play it play by play as if you were in the chat room right now. And first thing before I say about this chat room play and the different plays, talking about the technical levels that we utilize, our proprietary techniques that we use to make money, I just want you guys to be aware, webinar this weekend. All right, it's this Saturday, 1 p.m. Eastern Time start. And again, if you join, not only do you get the full projection of 2007 based on cycles and everything else, but you also get a free week of the chat room thrown in there. So again, you can use that in the last portion of the year, whatever you want, even in the beginning of January if you want, doesn't really matter. Bottom line is you have to join, you get that free week. It's a great deal, plus the projections of 2011 are going to be priceless. It's going to give you a sense about where this market is headed, ups and downs of 2011. Now, the gap down today takes you to 118 just underneath. What do we know about this level? On a technical basis, clearly it's a double bottom. All right, now what would you do? Would you be a buyer there? I think so. All right, double bottom. It's a no-brainer buy. Any trader knows that one. And if you missed it, then you got to be in the chat room, bottom line. Market starts to move up beautifully, up. Where does it go? It goes right to the blue line. At the blue line, you pierce the blue line, hit the 50 moving average. I talked about and called out a pullback scenario there in the intraday stock chat. Market pulls back, sure enough. Then you surge up. The next hit, do you short it on the second hit? No, you don't. First hit only. That's proprietary guidance by In The Money Stocks, things that we have developed. All right, you sure enough go right through, so it's a good thing you didn't short it there. You go right to this 20 moving average and the green trend line. What do you do right there? You look to short. Do you get a pullback? Absolutely. A tremendous pullback. Market starts to consolidate. It's not breaking the blue line. It's holding the 50 moving average and the blue trend line. That's telling you it has a little bit of sight. We also know POMO will come in later in the day. Sure enough, POMO starts, lifts it up, consolidates, breaks up to the upside beautifully, goes to the 200. Do you short at the 200? Absolutely. Absolutely. Scalp it, as I did right here just a few minutes ago. Market pulls back. See how many trades there are intraday just by looking at the technicals of one single chart? You could be doing this on Apple. You could be doing this on Google. I mean, take a look at Apple today. Apple was a no-brainer, guys. This morning I called out a trade right here. Why? First hit of the 200 plus double bottom. Two signals telling you to go long. Look at what Apple does from that point on. All right, now then after you take profits, where does it go? Where it goes right to the 50 and the 20. Duh, it's going to have resistance there. You're going to take profits there, obviously. It pulls back. All right, so pulls back down. Then it's getting a little pop right now as the markets are popping up. But again, these are just examples of intraday trades that you can be doing if you learn the right methodology. And again, this translates over into swing trades. That's the beauty of it. The research center for most of you out there that might be swing traders is perfect because we're utilizing the same methodology. We're teaching the same methodology to be utilized as a swing trade or on a swing trade basis. Now, again, let's go back to the SPY. Let's just touch base a little bit more. Now, if the market gets through this level, folks, all right, if this market gets through this level, you're going to look for a connector right here. You can just extend that line right out as well as this line right here. Just drive them right out right there. All right, so if you get through the 200, you're going to have a little resistance right here at 119.20. If you get through 119.20, go to yesterday's high at 119.50. Those are your next resistance levels on the upside. Now, do I think the market could stall out a little bit here? Yeah, I do think it is a possibility, sure. And we might see a little bit more of a pullback. If POMO continues to push up, eventually this could break through. I do think it's a good possibility that by the end of the day, we could be back to the flat line. Spiders are only down 22 cents now, so it's really not much. As I mentioned, the Dow is only down 11, 12 points right now. Very, very minor little pullback. In fact, Dow is only down 8 points now as it continues to reach for the stars or reach for the positive territory for the second day. Yesterday, we had basically a flat close right here and a big move up today, POMO working. So again, you have a scenario here where the Federal Reserve is doing their best to prop the markets up, and they're fighting the Europe contagion, and they're fighting basically the North Korea, South Korea instability. Right now, you have to make it a fair call here that, for the most part, the Fed's doing a good job of holding this market up. Now, is it a good thing? In the long run, probably not. Why? Because you can only prop up a market for so long before it becomes overwhelming and collapses, and then you have another bubble that collapses like the real estate bubble. So in the long run, it's not a very good thing. But for us as traders, or as swing traders, I want to make this clear. I don't care if you're a day trader or if you're a swing trader. If you hold a stock for a week or two or a month, that's fine. If you hold a stock for 5 seconds, that's fine. Everything works in the proprietary technical levels that we talk about on the market. You can apply it to any time frame. And bottom line is, if a bubble collapses 2 years from now, 3 years from now, guess what? I'll be on the cutting edge shorting that. Right now, I couldn't care less. I want to be making money. Does it anger me because a lot of amateurs and retail investors are going to be caught in it? Yes, and that's unfortunate. But then that's why they have to understand these principles that we go in and out of day in, day out and teach, because then you won't get caught in that, bottom line. All right, let's talk about a few other charts here. How about the USO? The USO is down slightly today. We saw a very strong day yesterday. Dollar is slightly higher today, so the USO is slightly lower. Let's just take a look at the dollar. The dollar, by the way, is off the highs of the day, thus the rebound in the markets. But as you can see, the dollar is still higher on the day. Here's where it closed yesterday. Here's where it's currently trading. And again, off the highs, which tells you the market probably rallied back. The market has rallied back. All right, how about gold? GLD. GLD's having a big day again. The more contagion in Europe, the more bailouts in Europe, the more gold is becoming a safe haven. Gold is now not too far off the 52-week highs of 139.15. It's only about $4, $3.75 away from that. I think that gold, though, to be honest, it might have a little stall out. You had a little bit of a head and shoulder pattern here. It's still in play technically, I suppose, because you could still make this a shoulder case, but it has to break this neckline. I will not be shorting this personally until I see confirmation of a down move and a break of the neckline. Until that happens, I'm not going near this, because as far as I'm concerned, it could go back to the double top very easily. All right, USO is also not a short in my opinion, because if the dollar does start to pull back, that could help oil get a little bit more of a bid as well in the coming days and weeks. All right, right now, again, we're dealing with the holidays. Now we have Thanksgiving behind us, but Christmas, New Year's coming on the horizon, and a lot of these issues will keep the market very, very light over the next couple of weeks, which enables the Fed to continue to probably prop this market up. Overall, going forward, folks, especially over the next week or two, I do think the market's going to chop around. As long as things remain quiet in Europe, as long as things remain quiet in Asia, I think the market goes choppy, very, very choppy and volatile, but sideways to up. That's my thought process right now. All right? And again, all they need is a little pullback in the dollar over the next couple of weeks, and they probably can keep this market up, along with POMO, and that's the way it'll be. So, again, very interesting market activity. There are going to be trades galore. A couple of the stocks that I'm continuing to follow, SPEX. I love this one, folks. SPEX getting a nice pop today. And, again, I continue to think this is a great trade. I love how it was all the way at 210. They announced good results. Then the company kind of screwed its investors by, basically doing an institutional offering, and that killed the stock that same day. Since then, it's come down to about 50 cents. It looks like it's making a bottom there. It looks very promising to me. All right, so, again, we'll continue to watch that. I continue to think it looks pretty attractive in my eyes. Also, TORM, as mineral stocks continue to be hot, I still think this is one of the top plays, right off the 50-moving average, down from 14 bucks back to 8.5 or so. I would not be surprised if this pops back to this gap window right here, or to this, right in this range, to the 20-moving average, somewhere in this range, which is close to 9 to 10. It's basically $9.75 to $10.50. In this range, would not be surprising to me to see a move back. That would be the general target if you start to get some volume. You need some volume in that TORM. Gets volume, it's off to the races, in my opinion, and will be a ginormous winner. Should be, at least. All right. Other stocks that I'm continuing to watch, Amazon. Amazon, good little pullback, was added to the bearish pro trader watch list last Wednesday. No, make that Friday. And again, looks pretty good. Nice little topping area right there, pulling back. NEM, taking a look here. NEM is having a huge day today, up $1.41. This was added to the bullish pro trader watch list. And again, look at that move on NEM today, up $1.41. Why? Bottoming tail near the 200 tells us just there's support. These are trades that are winners, folks, over and over again. JP Morgan was a great winner yesterday. These are all Research Center, by the way. So if you're in the Research Center for 49, ooh, 49.99. Only pikers can't afford that. I mean, it's pathetic. But bottom line is 49.99. You're getting trades left and right here to make hundreds, if not thousands of dollars almost daily. All right, so that's the key, folks. Join in. We'll talk to you soon. Join the Research Center. You get everything included under that Research Center. I'll talk to you soon. Take care.